Let me tell you about Alex. He's 28, a super sharp data analyst. But like a lot of people in 2026, he feels like he's completely stuck. He's doing all the things he's supposed to do, saving his money, investing in the stock market, but he's just treading water. He is desperately looking for an edge, any edge, to get out from under this constant economic pressure. Well, he's about to find a hidden crack in the system, a glitch that just might change everything for him. Let's dig into how he found it. And this, right here, is the big idea we're going to unpack. See, the problem isn't that the market is broken. It's that the entire playbook we were all given for how to build wealth, it's totally, completely useless now. The strategies that worked for our parents' generation are failing. And in this new economy, if you're not adapting, you are getting left in the dust. So welcome to what a lot of people are calling the silent depression. It's this really weird time where, on paper, things seem fine. GDP is growing, unemployment is low, but for the average person, it feels like you're going backwards. And why is that? It's because the cost of everything, especially housing, is skyrocketing way, way faster than your salary or your investments. Okay, this chart right here is Alex's entire problem in one picture. On the one hand, his S&P 500 stocks are chugging along, making a decent 5, maybe 8% a year. But then you look at the other side. His rent and rents in the areas he wants to buy in are jumping by a staggering 22%. It's simple math. He literally cannot save fast enough to catch up. He's just stuck on this economic treadmill, running as fast as he can just to stay in the same place. And this is a huge reason why. That classic real estate play we all know, it's done, over. Why? Because massive institutional investors, we're talking hedge funds and private equity, have swarmed the market. They've bought up everything and used algorithms to squeeze every single penny of profit out of it. For a regular person like Alex, the game is basically rigged. He needs a new strategy altogether. So there he is, late one night, just drowning in spreadsheets for his day job, and that's when he sees it. It's just a little blip, an anomaly. One tiny, pretty boring-looking neighborhood is showing this performance spike that makes absolutely zero sense. It's this tiny little signal, almost invisible in an ocean of data noise. This is the pattern that Alex uncovered. He called it the bandwidth yield curve. Now take a look. That white line, that's the normal housing market, the slow, steady, predictable growth we all know. But that gold line? That is a pocket of properties whose value has suddenly and almost violently just broken away from the rest of the market. It's skyrocketing, and on the surface, there's no good reason for it. So the whole mystery boils down to this single question. What in the world happened right there? At that exact moment where those two lines split apart, what was the trigger? I mean, that is the multi-million-dollar question Alex absolutely had to figure out. He spent weeks on this, just digging, cross-referencing dozens of different data sets, and then he found it. The trigger wasn't a new Whole Foods or a fancy new park. It was something totally invisible, something buried in the most boring place you could imagine: public records. The secret, it turns out, was digital infrastructure. So here's the glitch itself. It's a lag, a 12 to 18-month window of opportunity. He called it a valuation gap. It opens up the second a city permit gets filed to install new fiber-optic internet, and it closes when the rest of the market, Zillow, appraisers, other realtors, finally catches on. It's a temporary blind spot in the market, and inside that blind spot is a massive opportunity to build equity. And how massive are we talking? Well, while the rest of the market was creeping up at around 3.1% a year, the properties inside these growth clusters, as he called them, were jumping by 15 to 22%. All because of a super boring municipal permit filing that almost nobody else was paying attention to. All right, so this is where Alex goes from just being an analyst to becoming a strategist. He's not just watching the glitch happen anymore. He's building a system to go out and actively hunt for it. He develops the strategy and calls it Permit Alpha. The whole plan really breaks down into 4 key steps. First, you scrape all the public data you can find. Second, you pinpoint the specific permits that signal value. Third, you go acquire a property in that target zone before anyone else knows what's happening. And fourth, you bring in a completely new type of tenant who's willing to pay top dollar for what's coming. So let's break down how this actually works, starting with step 1, data scraping. Alex knew all this information was public, but the problem is it's buried in these awful, clunky city websites that are a total nightmare to search. So he built these simple little AI scraper bots to automatically monitor these sites 24/7, pulling in fresh data every single day. And his bots weren't just looking for anything. No, he programmed them to hunt for a very specific list of keywords, basically the digital DNA of an incoming fiber network. We're talking weirdly specific terms like right-of-way excavation, micro-trenching, or directional boring. These are the absolute telltale signs that a big telecom company is about to pour millions of dollars into digging up the streets to lay down fiber. So once the strategy helps you snag a property before the market price jumps, the next phase kicks in. You have to turn that normal house into what Alex called an arbitrage pod. This slide just nails the shift in what tenants actually want now. Alex figured out that the new generation of high-paid remote workers, they don't really care about granite countertops anymore. What they care about is speed, stability, digital power. In 2026, luxury isn't about how a place looks, it's about how it connects. We're talking hardwired Ethernet ports in every single room, commercial-grade Wi-Fi, and even sound-dampened offices for all those Zoom calls. And because you're providing this perfectly optimized tech environment, these arbitrage pods can be rented directly to tech companies for their remote employees, and they command a rental premium of up to 40%. That's 40% more than identical houses right next door. And here is the real turbo boost for the whole strategy. There's this incredible tax loophole called Section 179. It lets you write off 100% of the cost of all those tech upgrades, the wiring, the servers, the smart home gear, in the very first year. The IRS is basically helping you pay for the entire renovation. It's a huge financial accelerator. So by putting all of these pieces together, Alex didn't just find a way to beat the squeeze. He basically invented a whole new engine for creating wealth. He proved that in 2026, the old rules are gone and a new set of rules are here to stay. And the numbers totally back this up. Independent studies show that just having access to gigabit fiber internet instantly adds an average of over $5,000 to a home's value. Now think about that for a second. That's the same value as adding half a bathroom, but it costs way less and is a whole lot easier to do. And the benefits just keep stacking on top of each other. You get that rental premium. Research shows tenants will pay around 13% more for great internet. You get real savings on utilities, since SmartTAC can slash bills by up to 30%. And this is all happening on top of that huge property value jump we saw earlier. It's an incredible financial multiplier effect. So this is it, the whole story in 2 pictures. On the left, you have the initial discovery, that weird glitch in the market he called the bandwidth yield curve. And on the right, you have the step-by-step playbook for how to actually go out and capture that value for yourself. It's the whole journey from theory to execution. Look, the most important takeaway from all of this is that the very definition of what makes a property valuable is changing. It's not just about the square footage or the neighborhood or the kitchen anymore. More and more, a property's value is being determined by its connection to the digital world. And that really leaves us with one final big question to think about. In this new economy where data is everything and connectivity is king, are we even investing in physical buildings anymore? Or are we actually, without even realizing it, investing in the strength and the speed of the signal they receive?